Well, firstly, the usage of TRFs has evolved already. It's true that TRFs are now used by the sell side for hedging purposes. As you know, for instance, structured product dealers break down their equity derivative risk between volatility, correlation, dividends and repo, and hedge these risks accordingly with different instruments. So, in the same spirit as dividend futures to hedge their dividend risk, TRFs are a perfect liquid and transparent instruments for dealers to hedge their repo risk. So we think this usage is going to keep rising along with robust volumes of issuance in the structured product space. Now, secondly, we think that TRFs should be used much more by traditional large users of futures. By that I mean insurers, pension funds, asset managers. These participants structurally manage large positions of futures, for instance, Euro Stoxx 50 quarterly futures, and they have to maintain these instruments. They have to roll them every quarter, which means transaction costs, but which means also an uncertainty with regards to the equity financing spread embedded in the next futures they're rolling. So let's say, for instance, a large asset manager's macro hedges his long cash equity position by selling Euro Stoxx 50 futures. This hedge is dynamic, the position changes, but we've realized with some of our clients that they have every year an incompressible stock of futures. And again, this stock, they have to maintain it, roll it, with a risk attached to that. So what we suggest is for this stock, this incompressible stock, to use 1 year, let's say, total return futures, which means that they will save transaction costs, avoid the uncertainty over the rolling season, and on top of that, they will receive a higher equity financing spread because, as you know, structurally the term structure is in contango, which means that long-term spreads are above short-term. We think that the potential of this is fairly huge, to be honest. We are talking about portfolio optimization of 10, maybe 20 bips per annum, so this is not negligible. To us, that's the next growth driver for TRFs. And finally, we have new TRFs on the Euro Stoxx Banks Index, on the FTSE 100, on the SD3 as well. So for the three usages I've mentioned, which is investments, hedging or portfolio optimization, you bring even more tailored possibilities for this.